Today, we're diving into a massive shakeup in global trade that's hitting ports, ships, and economies hard. The escalating tariff war between the US and China. Since late 2024, these two economic giants have slapped triple-digit tariffs on each other, effectively slamming the brakes on one of the world's biggest trade relationships. Chinese ports are in chaos, containers are piling up, and ships are sitting idle. This is more than just a trade spat. It's reshaping global logistics. So, let's break it down, from the tariff timeline to the fallout at ports and beyond. Buckle up and let's get into it. First, the tariffs. Things kicked off in February 2025 when the US hiked tariffs on Chinese goods by 10%, citing alleged links to the fentanyl crisis. China hit back with tariffs on US energy and machinery. From there, it was a tit-for-tat spiral. By early April 2025, the US jacked up duties to a staggering 125%. That's 145% total with earlier tariffs. China matched it, raising tariffs on US imports to 125%. These aren't just high, they're basically a trade embargo. We're talking levels way beyond the 2018-2019 trade war, covering nearly all goods. Analysts say this could slash China's $439 billion in US exports by 50% or even 80% in a worst-case scenario. US exports to China, worth $143 billion last year, are also tanking. This is decimating trade between the world's top two economies. Now let's zoom in on Chinese ports. They're not officially closed, but many are in a state of near paralysis. The collapse in US-bound cargo has brought major hubs to a standstill. Take Shanghai, home to the massive Yangshan and Waigaoqiao terminals. Before the April 9th tariff deadline, ships were racing to beat it, and the port was buzzing. But the day the tariffs hit, dead silence. By April 10th, almost no cargo ships were leaving for the US. Shenzhen's Yantian terminal, a key export hub, is the same. Berths that were once packed are now ghost towns for US-bound vessels. Ningbo Zhoushan, another megaport, likely saw a similar surge and crash, with Zhejiang's factories grinding to a halt. In Guangdong, ports like Guangzhou's Nansha are struggling too. Business owners say containers are piling up across the Pearl River Delta. These ports are technically open, but with US trade lanes dried up, they're operating way below capacity. One shipping worker called it almost a complete standstill for US routes. The most visible sign of this chaos? Container pileups. Thousands of containers missed the last US-bound ships and are now stranded. In Shanghai, stacks of boxes are clogging port yards, spilling into inland logistics parks. Shenzhen's Yantian has towering container stacks, with storage areas nearing capacity. Ningbo's yards are likely jammed with unsent goods like auto parts and electronics. In Guangdong, warehouses and ports are stuffed with abandoned cargo. Satellite images from April 2025 show Shanghai's yards packed compared to last year, and photos from Yantian reveal idle cranes and mountains of containers with no ships to load them. This isn't just a logistics hiccup, it's a glaring symbol of trade grinding to a halt. Then there's the shipping mess. With US exports collapsing, ships are either idling, canceling trips, or rerouting. Some left Chinese ports half empty after the tariff hit. Carriers like MSC and Maersk canceled up to 40% of China-US voyages in April, and May alone, 34 sailings axed in April, half the schedule. Ships are anchoring off Chinese coasts with no cargo to pick up, or they're being laid up to cut costs. Others are diverting to Asia, Europe, or intra-Asian routes. Some exporters are trying to transship through Vietnam or Malaysia to dodge tariffs, but the US is cracking down on that. Official data backs this up. Chinese ports handled 10% less cargo the week after the tariffs hit, and container counts dropped. The Port of Los Angeles is bracing for a 10-15% volume drop. The once busy Trans-Pacific corridor is now a shadow of itself, with insiders calling it a tariff shockwave. This disruption is hammering trade and logistics networks. China's US exports are projected to crater by over 50%, shaving 1.5% off its GDP growth. US exports, especially agriculture and energy, are getting crushed by China's tariffs. Factories in Guangdong and Zhejiang are shutting down, with canceled orders and furloughed workers. Truck and rail freight to ports is down as export volumes shrink. Before the tariffs, there was a frantic rush. March 2025 exports jumped 4.4% as companies front-loaded shipments. Air cargo spiked too, with 30% more flights for 9 weeks to rush high-value goods. But now, that's all crashed. Logistics is in disarray. Shippers are grappling with complex tariff rules, stranded cargo, and rebooking headaches. US importers are stuck with costly containers they can't claim, and trade routes are shifting. Companies are sourcing from Mexico, Vietnam, and India instead of China, while China's pushing exports to Europe, Russia, and Africa, potentially flooding European ports with cheap goods. The global ripple effects are huge. European ports like Rotterdam and Hamburg might see a surge in Chinese goods, risking congestion and market saturation. Southeast Asian ports in Vietnam and Malaysia are gearing up for more transshipment and exports as US firms pivot. US ports are facing volume drops and potential empty container shortages. Shipping alliances are reshuffling fleets, moving capacity to Asia, Europe, or South-South routes. China's leaning on domestic markets and Belt and Road partners like Russia, boosting rail and truck routes. Visual evidence nails it. Satellite images show packed Shanghai yards and quiet shipping lanes. Photos from Shenzhen show idle cranes and container stacks. Port data charts show a sharp volume drop, and marine traffic maps reveal ships loitering or diverting. So, what's the big picture? These tariffs have thrown China's export machine into chaos. Ports are clogged, ships are idle, and trade is realigning. Chinese authorities are scrambling to clear backlogs and find new markets, while global ports brace for new flows. This could mean long-term shifts. China's role in global supply chains is changing, and countries like Vietnam and India are stepping up. But it's not smooth sailing. Europe's worried about cheap Chinese imports, and US ports are navigating their own challenges. As of April 2025, the tariff war's aftershocks are just beginning.